Great. Thank you, Valerie. And good afternoon, everyone. I'm delighted to be here today with an expert panel across a variety of different institutions. And we realize this is the last panel of the day, so thank you for being here still. And we promise to end on time before the cocktails. So with that, I will hand it over to each of the panelists to quickly introduce themselves before we dive in to our topics, starting with Colleen.
Hi, everyone. Is this okay? Good. It's a real pleasure to be here today. I am on the World Bank Sustainable Finance and Investor Relations team. Maybe just you've heard the World Bank name said a few times, but I think it's always good to step back and remember sort of why we're here and what we're doing. So our mission is to end poverty on a livable planet, and we do this by lending to governments and providing technical assistance to support them on their journey, right? And we're always on a journey. All of this is a journey, and I think it's really important. And I think this conference has done a really good job reminding us that we're on a journey. But in any case, at the World Bank, we have two lending windows. We lend to middle-income governments, and through the International Bank for Reconstruction and Development. We've been in the market for a very long time, 70 years, and we also have a low-income lending window, the International Development Association, that has been around for a long time, but issuing bonds only since 2018. And today, IBRD is the largest issuer of sustainability bonds in the market, with about 50 billion in average issuance annually. And IDA has a growing program and issues about 10 to 15 billion annually, and we label all the bonds that we issue. We take a slightly different approach, but of course, this was part of the journey. Let me stop there. I know. Okay.
Do you hear me? Okay, great, yeah. Okay, so good afternoon, everyone. So my name is Maria Bazhanova. I'm a co-head of ESG ratings for EMEA for Sustainable Fitch. So Sustainable Fitch is a new company, a new service provider. So we look at the ESG ratings for entities and bonds as well. We also provide the second-party opinions and additional services such as transition assessment, impact assessment, and we do have research as well. So we provide services both to investors as well as the issuers. So really happy to be on the panel as well and to be surrounded by real practitioners and contributing to the success of the market.
Good afternoon, everyone. My name is Modupe Famakinwa. I'm the head of funding and investor relations at Africa Finance Corporation. AFC is a multilateral set up to develop infrastructure across Africa. We currently have 3 member countries, and we've deployed over $14 billion to infrastructure across these countries. Pleasure to be here. Looking forward to the conversation.
Thank you. Another multilateral over here, supranational. My name is Mohsin Sharif from the Islamic Development Bank, senior ESG and investor relations specialist, looking at the funding program and especially the green, social, and sustainability Sukuk issuances. We have issued more than 46 billion to date in Sukuk format, which is the Islamic bond format. And pleasure to be here, reflecting the good relationship with EMEA, where we published the guidance on green Sukuk earlier this year, and looking forward to share my thoughts.
Great. So before we dive into some of the more specific topics such as gender, biodiversity, the emerging markets, Sukuks, I'd like to take a step back and start big picture. So within your institutions, what are some of the key challenges that you're facing right now, which are quite different in many ways within the emerging markets versus other areas of the world? Those key challenges, themes, trends that you're seeing, starting with Colleen.
Thanks. I think we're not off trend. I mean, I think transition finance is a big topic that we are concerned about collectively, particularly in the emerging market space and developing countries. These countries are financing really transformative, highly impactful projects. But where we find some of the challenges today is that while we are financing very documented, lots of data within our projects, we still struggle to meet some of the criteria that we would need for, say, EU taxonomy alignment, EU green bond standard. And so we are really trying to figure out how do we keep the momentum going, right? We have a job to do, we are doing it, but this is really something that concerns us, because it's not that the projects don't come with data, don't have impact, but I think what we're finding is that the local context, the regional specificities are not shining through in some of the regulation that we're seeing. So we're really pushing to see, can we get more sort of acknowledgement and acceptance both of the impact, the transformative quality of these projects in some of the regulation and standards that are out there. But maybe, and also I think the fundamental principle of this market, why everybody is here, is right. We would like to have an impact. All of this is being done for purpose, right? And transparency is the key principle of this market. I think we have that. So we have to figure out how do we, I don't know, in a way, get back to basics. There are a lot of things that we need to do, but there's also a lot of financing that needs to happen. And I think there are a lot of worthy projects out there. Maybe just to say a little bit more, I mean, at the World Bank, I mean, we're full steam ahead, right? We've been evolving our organization, our mission, because we have a very big job ahead of us, right? Countries are facing overlapping crises, challenges, and it's not just climate change mitigation and adaptation that we are still focused on heavily, but we have countries that are dealing with fragility, conflict, water scarcity, nutrition and food insecurity, right? So we are focused on doing all of those things too. So I think we are, upping our climate finance. We are ensuring that all of our projects are looking at climate, both risks and opportunities. So we're doing more and more climate every year. We have a new target for 45% next year, but we need to keep focus also on the social and, I think, as Sean said, the resilience aspect of what we're doing and what we're building in these countries.
And Modupe,
if I may just jump in as well, we experience a lot of some of the issues you've mentioned, especially with respect to having the right data, the data infrastructure to just report on the impact that we have. So a lot of projects that, AFC does, certainly they have impact, but some of the impact is, work in progress. Some of the impact won't be felt for years, decades to come. And the infrastructure just isn't quite there yet. We're seeing a lot of governments beginning to understand the importance of, being able to demonstrate this information and this impact. And, we're seeing investments in, just knowledge, right? And I'll just link that to conversations, for instance, around, the likes of the sustainability-linked loans and ETC, where, institutions have to determine, KPIs and all of that. So, in a lot of markets we're operating in Africa, just educating personnel is a very big step, right? It might not be deemed as ambitious in some other markets, but, we're still at the base level. Just in terms of some data, in 2023, according to Climate Bonds Global State of Market, about $870 billion in labeled bonds were issued. In Africa, that was just about 23 deals with 1.96 billion. That's tiny, right, relative to that amount. But when you look at other data points, you have conversations around, depending on what source, saying you need about $1 billion annually to plug the infrastructure gap. So there's certainly a need for, sustainable finance. And, I think one of the things we're seeing is trying to just lower the barriers to entry, trying to ensure that the information that is available can be presented in a way that makes sense to, investors and underwriters. And I'll pause here.
Okay, so maybe I'll take it from here. So, and it was very interesting to listen to panels today and discussions. And I think in terms of bigger themes and trends, so definitely transition was very high on nearly every panel. So there was a lot of discussion on that. And so besides transition, I think just looking overall at the labeled market issuances, so we still see, as a rating agency and looking at the bonds that we assess, so we still see that the issuances are skewed towards the, first of all, client mitigation. So in terms of adaptation, I think we still see that this is hugely underfunded. So there are projects that appearing like for adaptation, but still the numbers are not that significant. And also just looking in general at the use of proceeds like under the label bond, so they're still very much concentrated around the renewable energy, green buildings, energy efficiency. So we see some additional ones appearing, which is really positive. So for example, circular economy, biodiversity, and we'll spend some time like discussing that as well. Water, so it's very positive to see widening of particular use of proceeds that are financed under label bonds. I think another thing I wanted to mention as well, and this is probably to follow what you were just saying, so that different regions have different priorities, and we definitely see that in the development of regional taxonomies. So we all know that European taxonomy became a blueprint for other taxonomies, and we can still see the core like of the other taxonomies as well, like elaborating around the same standards as the EU taxonomy. But also, what is very important is localization of sustainability priorities. And we see that in the taxonomies which are developing. So for example, Australian taxonomy in the consultation proposing agriculture standards, mining standards. We look at the Latin American taxonomies, and they're really focused on the issues that are important in the region, so which is biodiversity, natural resources, but also focusing on the social aspects. For example, in Mexico, so there is a separate pillar on the general equality. In Brazil, it's also a lot of social objectives are incorporated in the taxonomies. And another example is Colombia, so the Colombia taxonomy that has land use specific standards which are not yet included in any other taxonomies. So in terms of just maybe a little bit in terms of particular challenges, I think it is around developing specific standards and developing like different approaches like in different markets, so which kind of raises a question of interoperability and also might be slightly confusing investors as well. So while we understand that there is like a need to develop local standards, but there might be also like a need to kind of standardization there as well. And from the companies, like in terms of challenges that we see, it's application of the particular standards included in the taxonomies. So it's still very difficult to understand them and to apply. And we already heard on the panels today, specifically on the do no significant harm standards.
So for me, I think coming from the Islamic bond market, the Sukuk market, just for a sense check, the Sukuk market is more than $850 billion as of yet. And we've seen increasing issuances in the sustainable segment. But sustainable Sukuk is also increasing at a pace where national green targets and policies are being implemented by major countries in the Gulf region, Africa, and Asia as well. Interesting point here is that while Sukuk overall increased 10% year on year since 2022 issuances, sustainable Sukuk actually increased 50%. So there is this demonstration of willingness from issuers to explore Sukuk, especially in the sustainable, from the sustainable angle, and try to mobilize resources for their green and climate strategies and projects. So this is, if you look at it, take a step back, it's actually a reflection of the wider bond market as well, where the conventional bonds are outstanding in the trillions, but Sukuk market is still 850 billion, increasing at a pace to touch the trillion mark, at least in the next 2 to 3 years. So that's actually one of the main reasons why Sukuk is slower in progress, is because Islamic finance is asset-based, so real economic activity and assets need to be created on the ground for Islamic finance to progress. So not to be confused with asset-backed. asset-based is there's a linkage to real economic activity. So I think that shows the progress from all countries, as well as multilaterals such as the Islamic Development Bank, where we have been playing our part with more than $5 billion in sustainable sukuk issuances to date, €1 billion in green sukuk, and 2 sustainability sukuk issuances as well. So all hands on deck from our side to keep the progress up and explore more sustainability and labeled issuances.
Maybe could I add something? I'm just, I think what we're seeing as well, because in addition to issuing, right, we started with green, we moved to labeling everything we issue, so combining the green and social use of proceeds. We also are providing advisory services to sovereigns to set up their own green, social, or sustainability bond programs and helping them develop their own taxonomies. And we see that there are issuers as well coming to market with broader sustainability frameworks, moving away from just the pure green. And I didn't know if, Maria, particularly on your side, if you're seeing more of that as well, because I think that is an interesting development, like what you were saying, where, before we were seeing lots of renewable energy efficiency, more on mitigation than adaptation. I think we are starting to see somewhat of a shift and more of an acceptance, perhaps, of a broader.
Yeah, exactly. So that was the point. So I was saying as well. So that we see widening of use of proceeds on the bonds. We also see some additional structures. For example, combining the use of proceed bonds with the inclusion of the KPIs into the pricing structure. So it's not the structure that have been sort of announced today, like by ICMA. So it's another one. So it's more like a combination of use of proceeds bonds, but the pricing mechanism as well includes the particular KPI in the structure. So which means that beside the impact, positive impact of selected particular projects, you also have impact on the level of a company. So, and then, of course, like in terms of structures, we've seen today, so that was really timely as well. So we've seen the interest, like from the, particularly from the banks, like looking into financing of the SLL loans, like to their borrowers. And I think it's really sort of, it's showing, it's demonstrated that ICMA is ahead of this, and publishing the specific guidelines is really timely.
Switching gears a bit to some thematic topics that we've seen gain traction over the last few years, particularly in the emerging markets, whether it be biodiversity, blue, gender, social. Starting with Colleen, how does the World Bank approach innovation in sustainable finance transactions? And can you also speak briefly on outcome bonds as well?
Yeah, sure. So, I mean, like many of you in the room, we were at this market at the beginning, and together with our peers, banks, investors, we, with our transaction in 2008, we helped to create some of that blueprint for the market today, and through the principles, a lot of the framework and infrastructure, the guidelines for this labeled bond market that has grown so much, as Krista walked us through. At the World Bank, we have a large issuance program now. As I said, we're labeling everything and reporting on everything that we issue. But we see our issuance platform as really a platform for innovation. So we're doing $50 billion in average annual issuance, but we are also innovating around smaller transactions like cat bonds, right? We've done $6 billion in cat bonds since 2009, and that's one thing that is sort of sits adjacent to our platform. But our platform gives us that ability to be able to try out new transactions in a market. And more recently, this has been outcome bonds. This is a little bit like what Maria was saying, where you take a use of proceeds bond, a regular World Bank Sustainable Development Bond, and you attach a performance mechanism to that bond. So the way we did the first one in 2022, the Wildlife Conservation Bond, known affectionately as the Rhino Bond, so what we do is we take what would have been the coupon payments, regular World Bank coupon payments, and instead of paying those to investors, we transfer equivalent amounts to the project developer. In that case, it was 2 conservation areas in South Africa. And for that initial bond, we had an outcome payer, the Global Environmental Fund. So if the project is successful, meaning do we have a positive rhino growth rate over the life of the bond, then the investors are rewarded. So the project does well, the investors are rewarded, and the grant is made to make those payments, right? So it's all performance linked. We've come out with 2 transactions since then that are slightly different. We don't have an outcome payer, but they're linked to carbon credits. So you securitize the future revenue from the carbon credits to facilitate the outcome payment to investors. So while these are small, I think they're really important for the market because they put something out there for the others to both to innovate, to look at, to say, could they do something different? I think the question now is, can we scale these for, we've done sort of the biodiversity space, we've done water purification, carbon emission reduction, and we've also done plastic and waste reduction. So, there are many other topics we're looking at. You can expect to see more of these bonds in the market, and I think the next question is, how can we get these to a slightly larger size, because they tend to be they have been between 50 million and 150 million.
And Maria, how have some of these topics shaped Sustainable Fitch's ESG ratings, SPO methodologies? What types of innovations do you see coming as a result of some of the comments Colleen just mentioned and those that the other issuers in the room today have discussed?
So I think if we consider specifically like sort of new appearing like bonds, for example, blue bonds or orange bonds, to be clear, so these are just the subset of the green and social bonds, so we don't consider them separately. So even though there are particular standards developed by ECMA, like on blue bonds, for example, so but we still assess them as within the guidelines for the green bonds. And I think what we see as well, like related to biodiversity, because I mean it's also like one of the big topics and was mentioned today as well. So that so we see a lot of issuances being financed not only by sovereigns and supranational banks, but we also see appearance of specific like biodiversity projects being financed through the bonds by corporates, mainly done by like manufacturing, utility companies, like where they can mitigate negative impact from their activities. Sorry, to go back as well, like how does that impact our approach? So we use existing market standards, like for the second-party opinions, and mainly looking at ECMA, but in some areas as well, looking at additional standards, like for example, particularly for the blue bonds or like for sustainable fishery, for example. So we look at the additional standards that might be provided by market standard setters, like such as IFC. But mainly, and also like in terms of SPOs, that probably differ us from the other SPO providers, that actually like our SPOs provide also the indication of the particular strengths of use of proceeds. So we don't only say that this is aligned with the ICMA market principles, with the core principles, but also we look specifically at the particular use of proceeds, and we look at the taxonomies, like mainly European taxonomy. We also look at the like Hong Kong taxonomy, and we analyze like the strengths and the ambition of the particular use of proceeds. So for us, like as the service provider and the SPO provider, so the standards available at the market are really important. So.
And Modupe, in your role, you also lead engagement with institutional investors. How do you see investors' preferences, requests evolving on the social topic, and how does that influence your organization's approach to sustainable finance?
No, I mean, it's very interesting because that has slowly changed and evolved over the last few years. And I think a lot of the speakers today alluded to it, whereas a few years ago you had the focus solely on, on the climate, or, it was just tied to green bonds. We're seeing a lot more interest now in the social aspect of the spectrum, seeing a lot of interest in the data and the measurement of, the social impact that is being had. Most investors these days want to know, sort of like what the World Bank is doing, labeling everything. They want to know where exactly the money is and how exactly it's impacting. So that's been an interesting conversation. And for us on our side, it's very positive to see the move, from just the focus on the E to, the entire spectrum. Because what we're finding in the markets we're operating is, for instance, in Africa, there are 54 countries, and those countries have various priorities as to what's the most important to them, whereas some of them may have a focus on gender-related issues, some of them are trying to resolve labor practices, some of them are trying to provide access to education, etc., and all of these are issues that are as important as the climate, right? So it's interesting to see the understanding of that context. Now, how has that impacted AFC and the way we do business? We're definitely a lot more cognizant of it in the way in our sustainability strategy. We're also a lot more aware in the projects we're on lending to, and a lot more conscious about, providing technical assistance where necessary to help these institutions or the projects that we're supporting to have the infrastructure in place to report on the impact. Because a lot of these projects do have impact, but they don't have data. And, you can tell a lot of stories, but if you don't have data to support it, then, it makes your approach a lot more difficult. So where we can, in our on lending, we're including information covenants that are forcing projects and project sponsors to think about the way they aggregate information and the way they gather information. And then where some of them are unable to prioritize this, because of course these are expensive, and again, it all boils down to priority, we then try to support with, technical assistance or leverage the likes of the IFC, World Bank, who are, who have active teams set up to provide this sort of support.
I think what we have also witnessed is an evolution of investor inquiries, on the sustainable sukuk side, where they are, where we have increasingly seen, questions on very specific themes in very specific regions. So, for example, women empowerment in the North Africa region, or youth development in the MENA region. So that's actually kind of reflecting our client base as well, our member states. At least half of them are least developed countries, so social is a priority for them. Instead of green and climate, the basic needs come first. So, and we are able to then pool those assets, pool those projects, and then provide them with a sukuk structure that can address their requirement. And then for us, on the reporting side, I think transparency and integrity, we continue to maintain that. Universal values, but also emanating from the principles of Islamic finance, which we operate under. So at the end of the day, it makes it easier to capture that information and then report to them transparently on a project-by-project basis, which is what they have appreciated in the past from us.
Before we move on to the third and final topic, just a reminder, if anyone has any questions, please feel free to send them across in the electronic Q&A. So our third topic on impact reporting. The lens through which we evaluate social and environmental impact for emerging markets is often quite different from other regions in the world. In order to account for a variety of regional challenges, social pressures, many of the projects you fund are multi-sectoral, and they have their own reporting challenges that need to be addressed. What really is the measure of impact in your space? What is working? What is not working? What do you want the underwriters, the investors in the room to know about this? I will start with Modupe.
I'll start with the last question, which was, what do we want investors to know? And I think, context setting is critical. Someone gave me this analogy, which, really resonates with me. So, take someone that has a house, right? You own a house. Maybe you don't have running water. Maybe you don't have access to clean cooking gas. And then your house is also not painted. Right, so you can have someone say, look, I have $100 million for you, but you have to paint your house. Now, to the house owner, that's probably the least important thing, is aesthetics. The person will probably rather have access to a clean source of cooking, probably would rather have a bed to sleep on, probably, rather have, a long list of things. So I think, we just need to understand that different markets have different priorities, and impact doesn't always look like exactly what you want it to look like. Well, it might be impact, but it might not be the most important, pain point for, whatever it is you're financing. So for instance, you might go to Asia And in that region, the practices might be more focused on, gender empowerment. In some markets in Africa, it's youth empowerment. In some markets, it's access to clean sources of cooking, or in some markets, it's some people have never seen electricity. So I think, just understanding that, impact looks like different things in different markets and being willing to contextualize. Now, I know that one of the challenges is we say all of these things, but we don't have the data to support. I think, a lot of the work going on the continent is to ensure that, we have regulations that require institutions, project corporations to start to standardize the way they report. So, we're not just sitting here and saying, take us the way we are. We're also saying, meet us halfway. We'll try and report as much as possible. We're going to try and invest as much as possible in data infrastructure, put together figures that show the impact that is being had. But, I think, the context is really key, just understanding that it may not look exactly the way you want to look. So, just step out of your comfort zone a bit and contextualize. I think I'll keep it there.
Colleen, Mohsin?
Okay.
How
Sure, I'll jump in. No, I think this is really very, very important, and you both alluded to this, right? Impact looks different in different places, and countries are prioritizing different things. And I think the role of, an issuer like the World Bank or my colleagues here is to help our government counterparts or who are the parties we're lending to help them design and develop the most sustainable project, the most ambitious and well-defined project that we can collectively together. But these projects are country-led, and countries have different priorities. Some are focused more so on climate, others are focused on still basic needs, right? And so our job is to help them do what they need to do to produce impact. And we need to help them do it in the most sustainable way possible, right? I mean, we just put out our impact report yesterday, and I could say that that's the measure of impact. I'd like to say that's the measure of impact, and it is, right? But when you look, we have a portfolio, you mentioned multi-sectoral before. I mean, some of that is the big challenge, right? You're trying to align to different standards, answer different questions from market infrastructure providers and others, and you have a set of metrics, but they really are not the measure of what's actually being achieved on the ground, how you're affecting lives. Like I could quote 11 million people provided with social safety nets last year, or how many people were provided with access to water. All of that is incredibly important, but it doesn't really show you the full measure of what we're achieving. And a lot of this is through the partnership with the project developers and others that we're working with to help them scale up their own capacity to be able to continually improve upon the projects that they're implementing.
Yeah, I think this ties in beautifully. So right from the get-go, the project design stage, where we are mapping the indicators, including the results, expected results of the projects, is where the transparency step starts. You are being honest about it, and then you report the positives and the challenges as well, because it's a shared journey, right? At the end of the day, there is, as she mentioned, there's a multi-factor perspective of the results, how it is impacting one aspect of their lives or not impacting the others. So again, transparency and integrity about those results and including them in the best way possible for investors.
I think I can add from my side as well that Sustainable Fitch is actually sustainability rating agency, and we assess particular impacts. So when we look at the entities, so we assess the impact of the entity to environment and society. So we look at the performance of the companies on the bonds as well. So we really focus on the impact. So for us to be able to identify the impact, so we focus on the particular disclosures, and disclosures might be not only quantitative, it might be also qualitative as well, particularly emphasizing how the particular selection of projects will impact the strategy of the company or the sovereign. So how that will fit into the objectives of the sovereign or the company. So, and then when we assess the specific impact of the project, so we use also external standards, taxonomies, and proprietary approach as well, so proprietary analysis. On the other side, we also, I mentioned we provide services to investors. And on that side, so I think investors are looking, they have another angle as well. So they're trying to assess like what's the particular measurable impact of the investment, looking at the, I don't know, like million investors. So what it will give like in terms of like people contribute, like impact, or in terms of, for example, like GZ emissions saved. So then when we look across different bonds, so we see that this reporting is not really standardized. So there are like different metrics and different units. So I think there are like some solutions, and we also launched recently a particular product on the impact reporting, just trying to help investors to kind of standardize streamline the impact reporting.
With the last 10 minutes, what would you like the investors, underwriters, other issuers, market participants in this room, if you could take a minute and a half to describe, this is really what I want to leave people in the room with today, most important to your institution, to you personally, what would that be? And we'll go down the line, starting with Colleen.
I think we have a lot more transparency. We know so much more about what we're investing today than we did even 10 years ago, and so much more than we knew 5 years ago. And investors are asking more questions, right? We think about sustainability-linked bonds. They're not use of proceeds bonds, but we are asking about the issuer system. Whether or not, I think in general, even if an issuer is coming to the market with a general purposes, not a labeled bond, investors are still asking, they're more interested in what the issuer is doing, right? So it's not just in the labeled space. So I think this has been a really positive development of this market. And I think we need to remember why we started, which was purpose. We wanted to move more funds into sustainable investments. We wanted to have transparency to do that. I think we seem to be at a bit of an inflection point, like, will we do the transition? Will we not? We need to do it, but how shall we do it? So I think we need to sort of really move forward. And, we have, as many people have said, we have a lot to do. And I think we need to be bold and ambitious and be willing to not worry. We're so worried about greenwashing and other things. I think we really need to take some steps forward and understand that there is a lot of worthwhile investment out there, and we have to be willing to maybe break out of some of those guardrails a little bit.
From my perspective, I think like the market is getting mature in terms of knowledge. That's definitely there. I think it's identifying specific priorities for markets, for companies, like localization of these projects, and keeping up with the kind of issuances. So I think we've seen already like that the issuances regained. So it's I think like we need to continue this positive trend. And I mean, this year particularly, there is a lot of like uncertainty around the elections in some countries. So I think, well, hopefully there will not be any negative impact on that, and all the initiatives that have been started will continue.
So my 2 words will be collaboration. Collaboration and, well, not a word, a phrase. Staying away from a one-size-fits-all approach. I think for us and for AFC, I've seen over the last decade or so that I've been talking to investors on behalf of AFC, I've seen a lot more openness, a lot of willingness to listen and to understand, what we're doing, the impact we're having, the challenges we're having. So investors have, moved a lot from having this is what we want, you either have it or we don't, to being a lot more open to just understanding the challenges. And, that has been amazing for us because we certainly need the capital markets. We certainly need the funding. We need to move the funding from, developed markets to, institutions that need them. One of the things AFC does is to facilitate development of capital markets. And, we take that ambassadorial role very seriously. And we've seen a lot of transformation in the way the entities that in the markets we cover have been experiencing access to capital markets. So I think that collaboration is critical on both sides. We're able and willing to provide information, and we just hope investors will give us the chance to, assess that information. Don't take it just as fit value, do a deep dive. And then the last thing is just understanding that it isn't a one size fits all. Even in the markets we cover, Nigeria is very different from South Africa, from Kenya, from Morocco. So, we have to change the lens every time you change the market you're viewing.
I think I would add, very nice words, I'll add acceleration, because, the multifold crises that the world is facing, and last week we saw the World Investment Report by the United Nations actually highlighting that SDGs financing dropped by 10% since last year, especially in agri-food and the water sectors. So the climate funding gap is still wide. It's widening as per the report. And so we need, I mentioned all hands on deck before, we need all instruments, sustainable instruments at hand to really drive capital towards where it is needed most. Food security, water sectors cannot be ignored. We are doing our part from the Islamic Development Bank through a $10 billion food security response program package. But this is, again, a reaffirmation of the commitment to plug the climate funding gap. GSS bonds, GSS Sukuk, we need all of them to be accelerated to help close this gap. And so we're playing our part, and we call on others to play their part as well for a better future for all. Thank you.
And we have one question from the audience. How can private finance support green industrial policy initiatives in sub-Saharan Africa? To what degree can investment capital support structural transformation for long-term development? For example, in the manufacturing sector, or is this provided solely on a project level?
I can take a stab at this in terms of, so I think that's critical, and it's something that, even, we are advocating. So, for instance, we have a large population in Africa. As a result, when you look at the pensions and then the pension funds, there's significant amount of capital there. There's also a lot of pockets of private capital, and what we're trying to do is harness those as much as possible. The markets are still in stages of development. We're trying to create instruments that, for instance, infrastructure bonds. There are infrastructure bonds in some markets which, tap the local currency markets. We're also seeing a lot of local currency instruments. We're also seeing a lot of work with the central banks to provide support to the extent possible, such that, private capital is safe to access, the development across all sectors. And I think that's something critical. We're well aware that, yes, there's a lot of access and relatively easier access on global capital markets, but we're also aware that there is a very vital need to harness the capital you have in country, in markets across, especially in the form of local currency funding, which largely sits in, government securities that just, are short to medium term, etc. So a lot of the markets are looking at how to harness this over the longer term. So thanks for that. That's a great question.
Yeah, just to add to that, I think public-private partnership is another model that we have seen where bankable projects can be created, and this is a real assets example. So personally, I would like to see a sukuk issued as well to widen that participation, and that's another way that a sovereign as well as the private sector, private capital can be plugged together to potentially finance this project.
So maybe just to add to this one as well, and I'm not really sitting in the same chair like as development banks, but I think we see as well involvement of development banks providing the guarantees, like looking at the specific, like covering the risk that otherwise like private investors wouldn't cover. So, and I think this is like really helpful to boost the private investment, specifically like in the regions like Africa.
No, maybe just very quickly, I mean, certainly we have, there's a policy angle for the World Bank for this particular area, but we have also increased our guarantee limit, specifically to address some of these, private financing gaps and to encourage different kinds of investment and risk sharing. So I think there is absolutely a space, for the MDBs and the multilaterals to get involved in this area.
And our final question before cocktails: what is the one word you would use to describe your outlook on sustainable finance for the rest of 2024, 2025? Just one. If you could keep it to that, I'll start. Mine is optimistic.
Oh, mine is, I think I sounded negative, but I am pretty hopeful.
For me, it's like widening the use, like the sort of financing the use of proceeds, like, yeah.
My word is hopeful.
Okay, I said acceleration before, but then consistency and acceleration as well to plug that gap. Thank you.
Well, thank you so much to all of our panelists and everyone in the room. Thank you.